newsletters.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 694, Nasdaq's up 204, S&P's up 73, gold contract up $31, trading at $16.64 an ounce. You got silver up 6 cents, $14.95. Light sweet crude down 94 cents, trading $23.56 a barrel. Notes and bonds. You get the 10-year up 5 ticks, 137.16. The 30 up 6 ticks at 177.30. And by the way, folks, the note and bond market, they're going up. You have volume contracting in a huge way. We're in a consolidation. I don't expect that note and bond market's going to hold. King dollar's down 1,000 ticks, trading 100.0122. The euro is at 109. The yen is at 109.76, and the British pound is at 120 to 1 U.S. dollar. If you're watching us on TV, folks, what you're going to see up here is that the last 4 days, if you're watching the dollar, folks, what you're going to see is this. You're going to see the correlation as dollar goes down, S&Ps go up. I get this on a 10-minute chart, and it's about as direct as it has been. This always fluctuates, but bottom line, you want to keep an eye on that because right now there's a direct correlation. It's fast. It's furious. Tom O'Brien, what's going on?
Good morning. We had a lot to get through in that quick top of the market update, man. 3.2 million jobs. How about that? And the market just crushes higher on that number.
Shuck it off. It's a beautiful thing. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, Kevin and his team, great show. Every trading day, 11 to 12 Eastern Standard Time. This is the time in the markets, folks, that you can learn so much about markets because you can teach markets, but bottom line, when you see them rolling back and forth, this is the experience that you need basically going forward. If you haven't test-driven yet the Thinkorswim platform, great time to do it. You're at our website right now. Hit the banner. Bring it up. They'll allow you to trade paper money. You can basically follow Kevin and his team every trading day. Ride 'em cowboy, Kevin.
Tom, I want you guys to understand something. We have been talking, you and I have been talking, Tom and Tommy, about this jobless claims number and how important it was going to be today. And why was it going to be important? Because uncertainty that was surrounding this number, it was going to turn into certainty. And I want you guys to think about this. Right at 7:30 Chicago time, 8:30 Eastern time, futures went down to about 24.04, right as the number broke. Since then, you can do the math. About 140 points they've rallied since that number came out. And this is, Tom, this is a master's thesis for business school on uncertainty turning to certainty and how the markets react to it. It's really a grad school type lesson that everyone just got here if you're paying attention.
I agree. And, this is the unfortunate thing, folks, is that this is not taught in schools. you can go to Harvard or MIT. It doesn't matter, man. The bottom line, you got to go through it. And, as Kevin is talking right now, folks, okay, this S&P is ready to blow by yesterday's high. Yesterday's high out here was, we got 25.60. We're at 25.52 right now. So it is amazing, Kevin. There's no doubt. And, the sad part, well, a market's a market. The sad part is that there's still folks that basically, and I don't blame them, do you know what I mean? They're worrying about there's going to be another fast down, there's going to be another leg down. And, I think we're very lucky, Tom and Kevin, that we're in the markets because there's so much uncertainty out there that I really believe in the market. So I feel like I got an advantage just in general. Do you know what I'm saying? Now, I can be wrong. But when I look at China, when I look, what just happened too, by the way, folks, we just brought Europe from off its lows. So we're the leader once again. I mean, 8:30, just as you said, Kevin, right? The DAX starts moving higher. It rejected its lower price. The FTSE rejected its lower price before we opened at 9:30. 8:30 it started, man. So it is what it is,
It's just an amazing place. The markets are an amazing vehicle where all information comes to meet.
It is.
Right? And this market, remember, if you're trying to explain what this market did this morning, this market will always trade off expectations. And the expectations and the whisper number, even though it came in a record 3.28 million jobless claims, the market was feared higher. It feared more. And clearly the market proved what it was looking for when it rallied. And even so, even if that number was worse than expected, just uncertainty turning to certainty, putting a number on it, the markets always favor that over uncertainty.
Yeah, there's no doubt. And, we talk, folks, a huge amount, not only about Kevin, the show, defined risk. You want to get your head wrapped around defined risk because even in this volatile time, what we saw personally, we have a Tiger's Den, and there's inside the option market, folks. That the premiums were high, but guess what? What ended up happening yesterday is that some of these Dow stocks went so exponential that the amount of dollars that went to the bottom line with a defined risk trade were also exponential. I know for a fact, Kevin, some of our Tigers, they've never done so well. They're flat out. Do you know what I'm saying? And, we understand this is a different type of market, but the reality is that inside the option market, you can put up a defined type of risk. And when you get markets like we have right now, you do get those moves.
It's wild, just to add to it, right? We always joke about the VIX, Kevin. So just this night, we opened on the futures Sunday night at like 21.74. We got the huge spike Monday. I was just going over the moves. I mean, you almost got 10% up by Monday morning when you traded up to 23.86 on the Fed announcement. You pulled right back down, lost 8% by Monday. You then went up almost 17% to 25.60. Then we dropped 6% to this morning, and we're up 6% again. Just staggering. So I don't think that those types of moves are priced into the VIX right now.
Right.
It'd be,
Right. You can make, based on the numbers, Tommy, that you just quoted, you can make a case for a VIX higher than it is right now, not lower.
Definitely.
Everyone's looking for VIX to go down. This market is trading percentages, not in a day. They're trading percentages in an hour.
How about those percentages, right? Even as I'm saying them, I'm like, they sound like they're crazy, man. But from 2174, we almost added 400 points in a 2100-point index from Sunday night to Wednesday, and then 150 points in the S&P, down and up.
Yeah, and people are asking, why isn't the VIX lower? I ask them, why isn't it higher?
Yes.
Because
right.
the curvature that you get from owning options right now, it's just amazing. It justifies at least bare minimum a number in the 60s.
Yes, no doubt, no doubt. And, if you just want a number, folks, that's phenomenal. Right now, the Dow for the year is down 22%. Well, the Dow was down 39% when we started on Monday morning.
Yeah, staggering,
okay,
man.
So pretty amazing. Folks, 45 minutes from now, outstanding program. You want to understand option strategies, futures, defined risk. Stay tuned. Check it out. Hit the Thinkorswim platform. Kevin, you have a great weekend, a safe weekend. Of course, we look forward to speaking to you next Tuesday.
Thanks for having me on, guys. Always a pleasure.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. Dow's up 680, Nasdaq's up 205.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den open house. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den open house taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 800, Nasdaq's up 231, S&Ps are up 91. And last night, folks, you had, I think it was not, it was last night, right? Nike came out with numbers last night. Nike's up $5. You're trading $84, and
No, we're going back 2 nights.
oh, was that 2 nights ago? Okay, yeah.
Time flies, man. We got a lot going on.
My
but they're
God.
up 7%. But yeah, they were at like $70 when they came out with their numbers, and they were up to 80 yesterday.
Pretty amazing, man.
Yeah, how about Target jumping around? Because they were in the news yesterday morning as well. They came out and said they're going to remove their guidance, and it seemed like they traded down harder than most. But
Yeah.
you'd be a fool to be a CEO and not remove your guidance right now.
Exactly. Right.
I don't know why that would even be. I'd question any CEO that tries to cling on to an expectation from a world that existed a month ago that was far different. So pull that guidance. They traded down $5, 5%, but that's what do they always say, right? Under promise, over deliver. The market not even really going to penalize you. I mean, to be an executive, they would kill to have no guidance.
Exactly.
Right? And this is one of the few times that you can actually do it and not pay quite a stark penalty. You have no guidance. You start from a clean slate. You have the excuse of a lifetime, and it's a real excuse. And hopefully, but just from a economic standpoint, executive standpoint, especially a company like Target, man, because guess what? Target might crush it out of the park too. And then what if you ever come to market and say, guess what? We pulled our guidance, but we did a lot of online sales. We started our delivery. We did this, and you just crush the expectations as opposed to trying to live up to numbers that you can't.
There's no doubt. And, I had got a call yesterday, and what it was about, folks, it was counterintuitive that, the stores that were open, meaning a Target, I got a call about Kruger. And, it's the largest grocery store in the world. The bottom line is that they sold that down yesterday also. And that's how markets are deviant, folks, okay? The bottom line is that the Kruger of the world, the Walmart of the world, they held up. They made higher highs, okay? Well, they made highs when the whole market was going south. To me, those are still great stocks. They just pulled back. They got light volume.
I agree.
Yeah.
I don't know why they've all pulled back. I got the chart up there of Kroger, $36 on March 18th. Guess what? You sent me. So was that a video you found or your personal video of lines at the supermarket?
I had to do that this morning, man.
Was it your video?
Yeah.
Yeah, you were at the store. Okay, right.
Yeah.
No, I did the same thing. I told you. So you were at the grocery store, Publix this morning. There's lines. Folks, there's lines at the grocery stores for essentials because you get there when they open. Publix now has hours 8 till 8, along with many other retailers. Show up at 8. There's a line of 50, 75 people, and the line moves pretty quickly in my experience, but it's a surreal experience, man.
It really, that's why I had to send it to you, man. I thought it looked so weird, man. Yeah.
It's from a movie where you show up and you have to wait in line to get into the grocery store to buy essentials on an ongoing basis. We're used to maybe something like that during a hurricane, a day or two. I went out and I stocked up on a lot of stuff when I started to see that because
I have my 2 cans of tuna fish and mayonnaise and mustard.
Okay, good. You're all set.
I am.
Perfect.
I was going to send you a picture of my fridge, but I knew that you'd freak out. No.
Oh boy, really? You got nothing? Fantastic.
No. Bridget's got plenty.
Okay.
So let's take a look at this S&P, folks. Okay, so the S&P right now, bottom line. We're going after the highs of yesterday, okay, and then it's going to be a crucial time right now. There's no doubt. This is the 2560 mark. We just hit 2573. Bottom line is that we'll see if this baby's going to hold. My take is going to hold. Is that we'll see where this shakes out, but I think you're going to see something that you haven't seen for quite some time, man, and it has to do with. Unfortunately, that there's still paranoia out there in a huge way. Markets, life, all of the above, and it is what it is. So,
yeah, I mean the headlines in terms of you have weekly jobless claims 3 million, right? But then you have the Senate passing the $2 trillion rescue plan. That goes to the House. They may vote on that as early as tomorrow. President all but assured to sign that. And then the very next headline, when I was jumping around, you have Jerome Powell on whether the Fed has enough firepower. We're not going to run out of ammunition, was the quote. I mean, you combine those two things. It's just interesting. I see headlines come out of other countries. I think it was India, that they're going to have like a $23 billion stimulus. And I said, India's got like 1.3 billion people, and they're only passing 23 billion, and we just passed 2 trillion plus all of the Fed is doing. A remarkable number, man. Now, India. Did you see yesterday? They're on lockdown. You can't even go outside for 3 weeks.
Yes.
But in their defense, folks, if you just shut things down as best you can, it's going to shorten the pain. In theory, if everybody actually follows that and no one leaves their house for 3 weeks, they're almost going to eradicate the virus, and it'll still be there. But you can't do that in America. Obviously, I'm not advocating it. But they are going to have a quicker turnaround when you shut things down for 2 or 3 weeks. But only 23 billion compared to the amount of money that's going to support what we have to go through here. It's mind-bending. You can't even comprehend $2 trillion plus the amount of money the Fed's putting in.
Right. What you can comprehend, and this is where this is going to, we talked about this yesterday. So you get 2008, where 12 years later, right? The real question is going to be: is it going to be 10 years, 12 years, 8 years, whatever that is? That you get another debacle that's happening. In my own head, it's a brave new world, of course, but what you also have happening is that folks should understand that no matter what happens, the Fed put is there, it's going to be there, end of story. Do you know what I'm saying?
The Fed put, you're saying the Fed influenced the money that they're providing?
That's correct. Yeah. That's correct. Whenever there is, and we all know that, well, maybe there's some people that never thought inflation was going to come in 2008 and 2009. We'll see, and there's still plenty of people that are thinking that, hey, it's not going to come in here. I can't see how it doesn't come in, because this is what the difference is. In 2008 and 9, folks, okay, the money went to all the banks. And what ended up happening is that the banks were broke. That's the real bottom line. This time, the money is going to the people. That's a whole different ballgame, man. That's a whole different ballgame. And then the question is going to be, as that money floods into the marketplace, the question is, what are the people going to buy? And as you flood into the marketplace, the bottom line is that pricing structure, to me, is saying it's going to go up. We'll see how that shakes out. But when that much money supply-wise is going in, demand-wise, versus what the supply is. And I'm talking about anything. It doesn't matter. We'll see where it shakes out. But that's saying to me that, we are going to see some type of inflation, I like what the bonds are doing. See, the bonds out here, folks, the bonds, they can't get to a higher high. And so what that's saying is that we're in a consolidation, number one. And if the bonds keep pulling back, you're going to see this market go higher. And because the bottom of this consolidation in the 10 years, 133.21, we're at 137.18. You only have 500,000 contracts in the bonds this morning. That's crazy. That's okay. We should be like at 2 million, folks. That's, you know what I'm saying? So people aren't buying into the aspect of these bonds, and we'll see whether the 40-year bull market in bonds is over.
Hey, I think we got natural gas not really high on the totem pole today with everything, but we'll cover it when we get back from this break.
We sure will. Dow Industrials up 834, Nasdaq up 234, S&P's up 90. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Natural gas. They really pegged this. The median estimate, Tom, was minus 29. It looks like they came in at minus 29.
Okay, and the market, I got it up there. We're sitting at about 173. Looking at the May contract, some volatility. Not sure what happened at 3:30 in the morning. Maybe there was just a buyer, but that market continuing to jump around from 178 on Wednesday to 168 on Thursday. Overnight, you jump up 6 pennies in a heartbeat, and we're right back up to that almost 174, but no real action. That's not where the action is in this market, man. Not lately.
No. And I just want to bring this back 15 years. I'm just curious as to where we are, in general. So let's see. So 161 was the low in 2016. We've hit 151. Wow. Okay. Yeah, this is going to be. It's right. Where we are is pretty dicey, man. That's pretty amazing, man.
I was just going to throw something out. So talking about the market will get over this in terms of the fear and stuff like that. But one of the things that Fauci, I was watching the press conference, the nightly task force press conference, PR from the president and his team out there. But Fauci, who I enjoy listening to, especially, right? And he was talking about that there's the risk there that this is going to come back around.
Right.
Towards, did you catch that, Tom?
I did.
Towards the flu season.
Yeah.
And I instantly went to the markets because I said, whoa, is the market about to be like, whoa, did you just say this is going to come back around as like a seasonal? And there's the potential there. And it might be rounds of this social distancing, even if you get it together. Now, all of this does come to an end in a year, 18 months when we get the vaccine and whatnot. But you might get a couple rounds of it, and just putting that on people's horizon. If they didn't hear it, it was pretty stark when he said it. I think the president had already left the room.
He had.
When he said that, which I was like, okay, he finally feels.
Yeah. Go ahead.
Like he can actually speak truthfully. The president had left the podium, left them. He said, hey, guess what? This might come around. Don't think this is like a social distancing period and we're gone. Even if you do get it out of your system, the odds that the global response is immediate, whereas if it trickles back in, you're seeing this in China, you're seeing it in Singapore, you could have to deal with it in a smaller, in terms of the horizon, and all of that potentially in play for the next 12 to 18 months. So, maybe a 2-year horizon is a good horizon where a vaccine's out there, everything's there. I mean, can you imagine the day when the vaccine's out, it's readily available, and you can go, this is like literally a zero fear?
Yes.
I think that's going to be a good year or
it's huge.
18. Yeah.
And they had to get Fauci back out there because they put him out to pasture 3 days ago because he did basically say something different than Trump said. And he said the truth, and Trump, of course, was, speculating on what type of drugs to take.
So I think about it just from the volatility is not going away. It's great that we have a two-way market, which is what you really need. I mean, we got the S&Ps now, man. It's rocking and rolling. We're at 25.65. But I imagine there's going to be those types of, not to mention, man, you have November. It's like as election, as in if this starts to come back, as in you start to see it when temperatures get colder, coming back with the flu as the election's coming in, if we get a change of the president in January, you're going to have some volatility for the next 12, 18 months for sure.
There's no doubt. And we're all going to be basically much more aware of the spacing, everything. I mean, there's no doubt about that.
If you weren't already a little worried about germs and OCD, I imagine it's going to make sure that you wash your hands, and you should. So some good hygiene for everybody in general. Seriously.
So let's take a look at that S&P. So the S&P blew by yesterday's high, folks. Now it's going to be a big deal. The reason being is that yesterday's high. Bottom line is that there's no doubt. As Tommy's just talking about a two-way market. Well, that's where you basically have the biggest risk that you're going to be a sell down once again. Yesterday they got it to sell down from 25.60 right down to 24.54. You just blew by that. So what you're going to see is you are going to see an expansion of price right now because the amount of setups, okay, just in general, which would make sense, there, meaning that you're short in that market there, you have a place that you can short it again and have your back against the wall. That's what ends up happening at these levels. So what you want to be looking for, let's see, so we only broke that like 3 or 4 minutes ago. If this thing can stay over that about 10 minutes, you're going to see a market that is going to get actually higher than we are right now. And right now, folks, okay, we're quite high. That being said, guess what? As when Kevin was on, our markets took the European markets into the positive. So.
And one level just to take a look at the Fibonacci, the retracement off the whole pullback in the S&Ps. So the rise would be 2643. That'd be a 38%, pullback from the move lower from 3,400 down to 2174. So that's still 80 points higher in the S&Ps. Would barely be a 38% pop from that pullback.
Oh yeah, hey, let's do that. I want to see that exactly. Look at that. Ooh, that's good. That's heavy. That's a big one. 2645. Yeah.
Yeah.
And the way we're set up right now, which is really cool, is that what did you say? The House is going to look at it tomorrow?
They may vote on it tomorrow.
Okay. So we're on Thursday, right? We have an up week. We have a shot that they might vote on it tomorrow. If that's what you got, you'll still get follow through. That's kind of, your probability is pretty good on that, so it's going to be wild. Let's go take a look at the GDX for some of the tigers out here. So the GDX right now, folks, it was up at 27.21. Right now, you're trading 26.60. You're going to need more volume. We need more volume in this GDX right now. Bottom line is that you got higher high yesterday. You got 102 million. The day before was 127. Let me go look at Newmont and Barrick. Those are the two largest weightings. Newmont's good. Newmont wants its high. That high in Newmont was $52. You're at 49 right now. Barrick, we take a look at Barrick. Yeah, Barrick does too. So, the bottom line is that inside the GDX, you have some weak stocks there, but the two largest weighting structures inside the GDX do want higher price. So. And we go over to King Dollar. You take a look at King Dollar. And, I got to show this chart again because this chart is something else, man. So King Dollar is down today. Watch this. I'm going to compare this. Let's see, cancel. I'm going to put this on a 10-minute so you're going to see how direct correlation this actually is to the S&P, ESM. And you're going to see it's tick for tick, folks, okay? So as you're watching the market, you want to be aware of this. Doesn't mean it's going to last for forever, but the last 3 or 4 days, it's been like correlation direct beyond belief. So when you're looking at it, the white line is the dollar going down. The green line is the S&P going up. And you can see it's tick for tick. Every time that the dollar goes lower, S&P goes higher. So we'll see where that is going to go. But right now, that's another helpful sign when you're looking at markets in general. Dow Industrials right now up 840, Nasdaq's up 234, S&Ps are up 86. Don't forget about our open house, folks. Tigers and Tigresses, come on over. It's open house at TFNN, real easy. You're going to see it at the featured content. You hit the Tigers Den, open house, and it's going to go up and say $39 a month. Just put OPEN, OPEN, in the code box. You're going to minus $39, absolutely free for a month. Tommy and I are coming right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 770, Nasdaq's up 208, S&Ps are up 78. Let's go inside the NDX and see what the movers are inside this NDX. So you get Broadcom is up 10%. That's quite a move. Align Technologies up 7.8. You get Lam Research up 7.4, and American Airlines is up 7.4. Taken away from it, Cintas is down 4.5. You get Expedia up 2.3. ADI, Analog Devices, is down 2%, and you have Pacecar off of 1. Inside the Dow Industrials, I mean, we both know what's going to be the mover inside the Dow. There's no two ways about that. Dow, you got Boeing put 165 points in, positive. Home Depot 55, American Express 51. United Technologies 47. The only ones that are negative right now, and this is where the deviance comes in, Tom, again, is that Walmart. Walmart is down, putting 6 negative points in. And Walmart, folks, was the only equity, okay, that I believe went to an all-time high in the debacle on the way down.
Yeah, you've almost seen, the stocks that held up the best, right, are faring, you could say, the worst as the other stocks, pick up steam. Kind of as the market says, maybe the only people that are going to do business aren't Walmart, Amazon, Netflix, and the likes.
Right. And that's, in that context, though, folks, it's really important to understand those stocks would be still the strongest, because that's this is a makeup, you know what I mean? Because people saying, hey man, this is like, look at the prices on these, okay? But just keep that in mind in general, okay? That the bottom line is that they proved. That's the bottom line. This one isn't a speculation. We know that already happened, okay? I mean, who would ever think, Tom, right, that a market, let's say the Dow, I believe it was 39%, 36 or 39% went down, right? That Walmart would be an all-time high. I don't care how much you're buying, right? I mean, that's but guess what, folks?
Here's what I was thinking. What if somebody told you could probably say a month ago, but it was kind of on our radar a month ago, the whole deal coronavirus, that was February 26th, even though it wasn't really out there. What if somebody said to you 6 weeks or 2 months ago that in March, we're going to get a weekly jobless claim number that's 3.2 million on one Thursday, and when the market gets that number, the S&P is going to trade up 5%.
Yeah, I'd say you've been on crack for a long period of time.
What is going on, right? So just craziness for sure.
No, it is, and it's the bottom line, folks. You'll remember these times, okay? Because then you'll remember, if you've ever read the Remembrance of a Stock Operator, Jesse Livermore. Markets go further, faster, up and down than anyone can realize, and that's what they do. That's exactly what they do, man.
And imagine this is what they do with so many mechanisms that we've put in place through the government, through the Fed, to smooth things out. Can you imagine what would have happened if those mechanisms weren't in place? Because you had the Dow down 40% as the Fed was saying that they'll provide all the liquidity the market needs.
You can imagine. Go back to the Depression. We weren't there, folks, okay? But the bottom line, that's what happened in the Depression. That there wasn't a backstop. And now this is where this comes out. I can see, Bernie Sanders wants to basically to bait Biden, just to basically let the world know again where he stands. But let me tell you something, folks. This is where backstops, okay, are important. You can think whatever you want of Bernie Sanders, but he had a lot of great ideas. I'm a capitalist, so I don't go with some of them. But the bottom line is that taking care of people, taking care of the health system is a big freaking deal. And all of it, we put $2 trillion in now, and all of a sudden, if we go back 8 weeks ago, $2 trillion was supposed to bankrupt the whole country for people for health care. Well, guess what? It doesn't. Right? I mean, that's the bottom line. So.
You just take that ball and run with it sometimes.
Why not? Hey, listen, I think that, I think it's important, man. I mean, because we're going to be, you mark my words on this, a year from now, we're going to be right back to it, okay? Well, you saw the guy from South Carolina, he's going out of his freaking mind because what was holding that thing up yesterday, folks, is that the bottom line is that people in his state, because his state basically doesn't pay anyone anything, may make more money on unemployment, and he's ranting and raving that, they're all going to lay everyone off. It's like a joke, man. It's like, anyway.
I hear you.
I'll stop.
I do.
Okay, I'll stop.
I know. Please. Come on.
Let's go into that S&P. Let's go take a look at that S&P. Okay, so let's pull this baby back. Okay, so this is going to be good. The battle's going to be, over this high of yesterday. It's the 25.60 mark. And let's see. How many we got? We have 7 minutes into this bar, and this is good. We're pulling back with light volume. So the bottom of that bar, here we go. 25.40 is the number. 56,000 contracts, and right now you're at 35. And you get 2 minutes. So that's saying that right now that's not going to break it. Let's go to Steve in Alaska. Hey, Steve, what's going on?
You, brother, you. Thanks for all you guys do.
Hey, Steve, good morning, man.
Yeah, I'd like to, sometimes I think American citizens think $1 billion is $2 million and $1 trillion is $3 million. If you take a pack of $100 bills, it takes 100 of those packs to make $1 million.
Yeah.
And to do $1 trillion, you have to have 1 million of those stacks. Now, they just okayed $2 trillion, and they're already talking about 2 more dumps of $2 trillion at least each. And the market today, you saw it down 50 S&P points, and then poof, this tremendous employment thing, and then boom, we're up 50 points. Now, my question is simply, what is your opinion about possible outrageous inflation in the months and years to come?
Hey, we'll see. We've been talking about inflation forever. We'll see whether inflation kicks into the marketplace. So you can have, we get hundreds of millions of dollars that's getting put into the marketplace. The real question is going to be, how does it change hands? Because that's what kicks up inflation. What is the expectation? How does it change hands? You know what I'm saying? So if I've learned anything over the course of the years, the United States is still the strongest country. We have the best workers. We still have the best backstop. And this proves it, folks, okay? The bottom line is that you go look at the rest of the world, man, they're going to be in trouble. This is showing the strength inside the U.S. economy, showing what we can do, and we'll see whether inflation does kick in, hyperinflation, that's a whole different ballgame. I would say that we are insulated from that versus the rest of the world, because we still have the strongest dollar versus everyone else. So if we're in a hyperinflation, the whole world's going to be in a hyperinflation. Do you know what I'm saying? So, Yeah.
Okay. Well, I appreciate your input here, and it looks to me like the Federal Reserve were firing from cannons this morning to bring this market back. I don't know, though.
Oh, yeah, they are.
They could be, for sure.
No, there's no doubt, man. Hey, listen, we got a couple M60s out here.
That's right.
Yeah.
Stay right there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien. Dow up at 745, NASDAQ up 193, S&P's up 72. And, you know, folks, you just heard that promotion for Basil's newsletter. If you haven't checked out his program, check it out, because Basil did that last workshop, but Basil could smell the news coming, okay? It is so wild, okay, what that was about. And, you know, that's very unusual, all of the above. I don't care what it is. But I can tell you that call there, that news and how it's going to be taken is a huge deal. And then I'm going to bring you back to Basil Chapman before rates ever went down. He talked about, I think like 15 years ago, the Japanesing of rates in general, okay?
Yep, the Japanization, right, of our U.S. rates.
So
I know.
cool, man. I mean, those two calls, like, just over the top.
We're going to have to go back through the TFNN archives from the 2010s and find all of those clips, man, for sure.
Home rates, mortgage rates, folks, bottom line, you know, if you're going to get refinanced to go to the deal, guess what? The refinancing has dropped off. The average rate right now today is 3.5%. So you're probably at 3.25. Bottom line, just keep that in mind.
Risk reward can't go wrong, really, right there, right?
Man, if the average rate is 3.25, 3.50 rather, that's what just came across the tape. Okay, at 3.25.
Okay.
No, 3.50. Sorry, no,
Okay.
3.50.
Oh,
that's the
we'll get
average
there.
rate.
What's it? Okay,
3.5%. So the bottom line is that means the bread's out there, whether it's refinancing, whether of course, the folks looking for houses are going to go down dramatically. There's no two ways about that.
Yeah.
That it is what it is. Stay right there, folks. Think of Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at them, folks.